using the search tool to find different positions based on your risk-reward tolerance, of course, and the different strategies as well. Ramesh says, hi everybody. He's from Orlando. Hi Ramesh, I hope things are going well for you down in Orlando after the events a few weeks ago. And Jerry, of course, says, hi, I'm here from Edmonton. Sound is good and screen is good as well. Fantastic. Well, thank you guys for chiming in. Thank you for joining us today. Let's go ahead and get started with our presentation. First, we want to begin is what is PowerOptions? Well, PowerOptions is a patented suite of search and analysis tools designed for self-directed options investors. Our tools will allow you to search across the universe of options in less than a second to identify only those positions that match your personal risk-reward tolerance. Once you've identified those positions, you can quickly compare the risk versus reward, do further research and analysis, and run what-if scenarios on your positions. And we also offer a powerful set of portfolio tools to help you paper trade, track your positions, evaluate rollout opportunities, and manage your positions as well. Okay, and in addition to that, we do have countless educational articles, tutorials, help videos, and pages. Ernie Zarena created the PowerOptions tools back in 1997. Everyone here at PowerOptions uses these tools to trade their personal accounts. In fact, I don't even log on to my broker only to make a trade. By the time I go to my broker, I've already made my informed decisions, know exactly what I want and what prices I want, and put in my limit orders as well. So we have many more years of combined trading experience. All right, real quick, those of you who don't know me, my name is Mike Chupka. I'm the Director of Education here at PowerOptions. I've been trading options and helping others and teaching as well for the past about 14 years or so. I do handle a lot of the coaching sessions and education on the site. I've co-authored 2 books, presented various seminars around the country for options investing and using the PowerOptions tools. And of course, I am versed in all strategies on the site as well as other strategies as well. All right. Sorry, Jerry, different Jerry, Jerry W. from Fremont says good morning as well. All right, fantastic, guys. Okay. All right, so what we're going to cover today is we're going to cover the search tool, the main starting point of identifying positions using PowerOptions. Yes, we have a variety of tools for further research and analysis and tracking and management. Today we're focusing just on tips to help you get started finding new positions in various strategies. We're going to talk about the simple steps to get started. We're going to talk about the ease of customizing the search tool, evaluating stock and option criteria that are available in the different strategies, of course, simple things such as changing your expiration dates, and how to create a specific search. Some of you may just want to look for specific searches for ETFs, a specific technical or fundamental on stocks for a given strategy, or maybe just screenings for something specific such as dividend-paying stocks as well. And we're also going to discuss general tips and suggestions on the search criteria. Very simple and very simple and of course very easy. Before I get into the basic tips here, let me just go ahead and go back one. We're going to navigate over to the PowerOptions suite of tools. And I just had a question come in. I'm sorry, it's one moment. I do apologize. There we go. From Clement, he wants to know if is the webinar going to be recorded? Of course, we are going to record the webinar. And while I'm here right now in PowerOptions, I'll just show you very quickly. Underneath the main home tab, at any time, you can go into free webinars. And I'll send the link to everyone. This is actually a public page. You don't need to be logged into your account to view the various webinars. It's powerop.com/webinars.asp. And you see here under the PowerOptions tools, we have one from March on setting up the search tool. Most likely today's presentation will replace that one. It'll be uploaded here as well. And you've got other categories such as the option strategies, looking for specific strategies, options concepts as well. Weekly options, managing a broken stock position, implied volatility, the Greeks, and why you may not need them, and so forth. All right, so before I begin jumping into the search tool, I'm just going to have a quick poll I want to ask everyone that's in attendance right now. And what I want to know is what option strategies are you currently trading or maybe paper trading? Are you looking at covered calls and naked puts? Are you perhaps looking at the protective positions, meaning radioactive trades, collar positions? Are you looking at the vertical spreads, bear call credits, bull put credit spreads, maybe even iron condors or the debit spreads? Are you looking at buying options, buying calls and buying puts, for example? Or you may be looking at something more along the lines of calendar spreads, buying a far out in time option and selling a near-term option against it. So just let me know, what kind of strategies are you mainly looking at right now? Okay, so I've had the poll open for about a minute. I do have over 70% of you voted. All right, so I'm going to leave the poll open for another 10 seconds or so. Some votes still coming in. Okay, 5, 4, 3, 2, 1. And James says he does all of them. Fantastic, James. Okay. Oh, you can only select one. I'm really sorry, guys. That's an error on my part. So you can send in if you're doing the other strategy. I do apologize for that. Should have been multiple. But let's go ahead and close the poll right now, and I'll go ahead and share the results. We'll, of course, review all of these, but 11% of you right now are doing covered calls and naked puts, though many more of you may have selected that. It does look like 56% of the audience today is doing the vertical spreads, and 33% are buying options as well. All right, so let's just go ahead and hide that. And we'll start off with the vertical spreads for the time being, but we will go through every one of them. Now, when we're talking about the vertical spreads, of course, we're probably focusing on bull put credits and maybe bear call credits. You log on to your PowerOptions account. If you don't see a strategy that you want, simply click the Other Strategies tab on the far right of the tab navigation menu, and this will take you to the strategy selection field. So we can just remove any of the ones we don't want. For now, we probably don't want short straddle in there, but we do have covered calls and naked puts, credit spreads, married puts there, long collars there. We did have 33% of the audience doing long calls as well, so we're going to go ahead and add long call in there also. And actually take out collar for the time being, and we'll put in long puts. Won't be much of a difference there, but we'll add that in also. Later we'll also look at the calendar spreads. So once we've customized our tab navigation and the strategies that we want, let's start off in bull put credit. Now when you first click on the main strategy page, you'll be taken to the strategy home, and you have a brief description of the tools that are available, and of course you'll have some Learning Center information, and of course a basic profit and loss chart. When you want to get started, the simplest way to get started, the simple steps to get started in any strategy is to use the sample searches or the main search. In every strategy in the sample searches field, you'll see themed strategies designed to give you a starting point to help you create your own personal search. So if I'm looking at bull put credit spreads, we could start off with the bull put spreads on basic ETFs, 10 to 45 days out to expiration, minimum 4% return. If we were looking for more quality stocks of the bull put credit spread, I might consider starting off with the 5-star bull put search. These are stocks that have a Standard & Poor's 5-star rating, at least 4% out of the money, and sorted by the highest percentage return for the credit spread. And of course, we could also go to the safety first bull put search. So once you're getting started, the sample searches are a great place to begin. Let's go ahead and start here with the 5-star bull put search. And when we click on that section, it'll take us into the main search field where we see our basic results that match the criteria, the themed criteria from our sample search. Now, anytime you open a search or you open one of the sample searches, what I want you to do is essentially ignore the trades that appear. Don't get caught up in researching them right now. What we want to do when we first open a search is scroll down below the listed trades and take a look at what's called the parameter field. In every strategy on PowerOptions, you'll have the ability to search for about 20 to 25 different types of options criteria. We also offer fields for the stock technicals, various things such as percent of 52-week range, volatility, RSI, average stock volume, Bollinger Band and Bollinger Band ranges, historical moving average trends, MACD as well. You can also enter criteria in for the stock fundamentals. Simple things such as stock price limitation, earnings per share growth, dividend yield, market cap, and more. We can also choose to avoid stocks that have an earnings date between now and expiration, or avoid stocks that have an ex-dividend date between now and expiration, or look specifically for ones that do. In addition to that, we can also go into the lists field. We can create our own personal list to at any time screen against the 20 or 30 stocks that you follow on a regular basis. You can exclude sectors or industries or just screen against specific sectors or industries. And we have a wide set of pre-populated company lists such as Investors Business Daily, S&P, NASDAQ 100, value line lists as well. So there's a variety of different default company lists that you can use to help you with your screening. Now in this basic search, I want to focus on the right-hand side here of our parameter field. And here we see the active filters that were being used for this specific sample search, the 5-star bull put search under the sample searches menu. Notice that we don't have any technicals or any fundamentals currently added into this search. Why? Because this sample search was derived on just looking at stocks that are in S&P 5-star list, the stocks that are recommended a 5-star buy by Standard & Poor's. So we don't need to worry about putting in a lot of technical or fundamental criteria because we decided to use that stock list as a starting point, so our universe of options is already narrowed down. It's a good starting point. Now we can take a look at the options criteria. And we see here we're looking for expirations between 15 and 55 days out in time. If you wanted to screen for weekly options, we could just leave our expiration time frame at all months and narrow down our expiration time range, or we could choose to look at all weeklies as well. Okay, John came in late and asked if this is recorded. Yes, John, we are recording this webinar. We'll have that available for you later this afternoon, most likely. In every option strategy on PowerOptions, in addition to the time frame, you'll be able to screen by implied volatility specifics. The risk return fields, this will change in different strategies, and we'll review that. But for our credit spread, we'd look for a minimum net credit, maximum risk range, which might apply to also the strike price difference, minimum percentage return. We can select specifically the range in or out of the money for the short option or the option that we're researching. And then you can screen by other specifics such as the Greeks, delta ratio, probability, in this case the bull put credit spread, the theoretical probability that the bull put spread would expire worthless, Black-Scholes values and ratios, bid-ask spread ranges, and then of course the liquidity for option volume and open interest. Now, if you decided that you wanted to go a little bit shorter term with your positions again, with your credit spreads, remember we showed that we're looking for 15 to 55 days out in time, we could either change this directly to the standard July expiration, which is 10 days out in time, if we just wanted to look for not this Friday or next Friday, or if we wanted to look for this specific week, I may go ahead and put in a field for, let's say, 0 to 7 days out in time, so any expiration there. Let me go ahead and submit that by just making that simple change. Okay. And this is what I probably expect. We don't have any bull put spreads that match our criteria. Now, that's fine. What we did is we took a search that was originally looking for a minimum net credit return and range out of the money that applied for a more further out in time strategy, 2 weeks out, 3 weeks out or more, even a month out up to 55 days. Now that I've restricted my bull puts to be in a shorter time frame, and I'm keeping this quality stock list, stocks that have the S&P 5-star rating, which means they're probably less volatile, probably have a lower net credit if we're going at least 4% out of the money, that dictates to me that in order to find some positions, we've got to shorten those values. So let's look for a minimum net credit right now of 15 cents, and let's just try going 2% out of the money or more. But for credit spreads, one thing that you'll probably use in your criteria, and one thing that I would like to use as well, is probably looking for at least a theoretical probability that in this case the stock would stay above our short put strike price at expiration. Let's go ahead and look for at least 70%. Now this field will kind of work hand in hand with the percent out of the money. So if I look for a probability of 90%, I'm probably going at least 3% out of the money or more for a weekly option, but at the same time, we're probably only looking at net credits on this less volatile stock list, probably only 7 cents, 10 cents, something in those lines. But let's submit the search now if we made our two subtle changes, our expiration time frame, our net credit, and our range out of the money, and we see five potential positions on 3 different stocks. There's 3 different spreads on Goldman Sachs, one on Avago Technologies, and one for Google as well. Now, before we go any further, in addition to customizing the search criteria to match your needs in any strategy, you can also customize the results view. We have some criteria basically set up for you when you start, things that would be interesting. What would I need to know as a basic view in a bear call or bull put credit spread? Well, obviously, I'd need to know the stock name and perhaps the company name, but also the symbol. I'd like to know the current price where it is right now. We need to know which options we're selling. So here we see the first one on Goldman Sachs. We'd sell the July 8th 141 put for 43 cents and buy the 139 for 20 cents. It's a 2-point spread. We could potentially get a 23-cent net credit, a 13% return, and that gives us a theoretical probability of 84.7% that this spread would expire worthless. Now, we also, in the system, asked for the range out of the money to be one of our filters. We may be interested in some more liquidity as well, and you may want to be able to review some of the stock criteria. So in any strategy, at the top of the results, you'll see the Choose Columns button up there at the top. And when you click on Choose Columns, you can customize the view. Any of the criteria you can use in a specific strategy, you can select to view in your field. So if we wanted to view the deltas, if we wanted to view the range in or out of the money, for example, which is one we're going to look at right now, our percent range out of the money. And if I also maybe wanted to look at some of the option volume, the short option volume and maybe the short option interest, we would add that in as well. Simply check the boxes next to the criteria you want. And to help you identify or compare the different stock positions, if you wanted to compare things such as average stock volume, percent of 52-week range, for example, MACD, number of days the MACD has been over the signal line, those are all technical and fundamental criteria you can also add in your view. Once I've made my selections, I can choose to change the column order depending on how I like to view it. We're just going to click Submit and Save right now. We prompt it to refresh the page, and now we'll have our extra criteria added. So we added the average stock volume, the short option volume, and then of course the percent out of the money for our short option. All right, now we're not going to talk about researching and analyzing each individual position here, why we choose one or the other. That's for a later date, okay, a later presentation. We're just want to focusing on the search tool right now. So for credit spreads, quick starting point, as I mentioned, is we could start off with the sample searches as a theme search, but also let's go to bear call credit now, and instead of going into the sample searches, let's go into the main search. And every search, there are also default criteria that you can use as a stepping stone to create your own personal search. For the income strategies that were the most popular selected today, the vertical spreads and covered calls, you'll see that there's a default search in each of those for weekly spreads. Ernie's actually tested the criteria that are shown for our default weekly bear calls, weekly bull puts, and so forth on these positions, but you can change them still to match your specific needs. Now, an interesting thing about the weekly bear call and bull put screens, the default criteria that you can use under the main search tool, is you notice that the expiration time frame we've selected is between 8 to 17 days. Again, I have a lot of times a new customer to PowerOptions will call up and ask me, well, I looked at your weekly searches, but I don't see how I can get this week's expiration, which is 2 days out, 3 days out for Friday. Well, the reason why we're showing the expiration time frame of 8 to 17 days on our default weekly searches for the credit spreads and other strategies is because historically we found that going closer to 2 weeks out in time yields a better profit long term than trying to force trades week by week by week. The reason why is very simple, of course, is that when you try to go for the 5-day out or 6-day out trade or even the 3-day out trade as of today, you get a smaller net credit. You should really only expect 15 or 20 cent net credit, for example, maybe lower if you're looking for that good probability. But what happens there is that the losses, even if you're using a 1-point spread or a 2-point spread, get compounded much faster because of the lower net credit. Now let's be honest, we are going to experience a loss. An unexpected event's going to happen maybe every 2 months or 3 months on a quality stock where it just shoots below both strike prices for a bull put or suddenly shoots above both strike prices in a bear call and you hit the maximum loss, which might wipe out 10 or 12 previous trades. So the historical test showed that the 2 weeks out yields a much better return consistently than trying to go 3 days out, 4 days out. I do have several customers I talk to on a consistent basis, PowerOptions subscribers, that only open trades on Friday morning, expiring that day, and close them right before expiration. That's a little bit more aggressive for my taste, but if it's working for them, it works for them, and these tools give them the ability to identify just exactly what they want in a given strategy. Okay, now, other criteria, other default searches that you can use, simply click the drop-down menu in the search settings saved as field, and there's a variety of different ones. Bear call credits on the VIX using weekly options. Search Ernie created basic initial values looking for bear calls or bull puts 1 month out in time, and you'll see a bull put or bear call number 1 as well. These are simple starting points that you can use as a stepping stone to create your own personal search. Right? So that's the easiest way to get started. For those of you that were trading covered calls and naked puts, and very soon those of you that are doing credit spreads, we've got another feature for you that's available. We're going to look at that right now. If I go into covered calls, we know that we could again go into the sample searches menu, and there's several default searches that are created that you can use as a stepping stone. You can go through the descriptions here in each of the strategies under the sample searches menu to see which one gives you the starting point that best suits your investing needs. Once you get more familiar, of course, we could go directly into the search for covered calls or naked puts. And as before, as soon as I open the search, I scroll down below the listed trades. Oh, I'm sorry, folks, 1 second. I'm going to scroll down below the listed trades. Whoa. I apologize, ladies and gentlemen. Hold on 1 second here. All right. Sorry about that. That just decided to go a different way on us. But once you scroll down below the listed trades, you can click the drop-down menu and select any of the default searches that we have here. See what those filters are in the active filters. See which ones you'd want to change to match your criteria. But right now for covered calls and naked puts, for those that are trial members, or if you subscribe to the 20-minute delayed service or above, the real-time service, you'll see a field for picks of the day. The picks of the day is going to give you 2 to 3 listing for potential covered calls that match a set of criteria that have been tested and that Ernie has put together as well. Okay, so he's tested these in the back. You see things such as the Zacks average broker rec, downside protection is greater than 10%, yielding a minimum 0.8% return if assigned, some fundamental and technical criteria also. So to get started easily, Ernie has tested these as well. It gives you a definition here of what's going on, but this might be just a basic starting point. Now, if you check the picks of the day, and you look at this position, you decide, well, I don't know if this is really what I'm looking for, but it's close. Well, that's perfectly fine. Just as we did before, we can go directly into the search, and from the drop-down menu, we could select picks of the day. That's the same criteria that Ernie used in that field. And now, well, we can customize it a little bit more. We don't see any results here for that specific search. This is done in the current moment. The picks of the day that were shown were, of course, from earlier update this morning at 11 o'clock. But you also have 2 picks in the naked put screen that you can use as just a basic trade idea or trade concept to view the picks of the day or the weekly picks of the day as well. All right, now, as I mentioned, the picks of the day is coming out soon for the other strategies, bull put and bear call. And nothing changes except for the subtle criteria for those of you that are buying calls. So again, we can start off with sample searches for a long call buy or a long put buy. We see here we have themed searches for call volume, long calls where the total option volume today is greater than the average volume for the stock. Specific search using Bollinger Bands, so looking for stocks that are up near the top as well, or near the bottom. And of course, calls to buy. Your stock's in an uptrend ranked by volatility. But then, of course, we could also go into long call search, and we'll see similar ones listed there as well. Bollinger Band screen and initial values, all to be used as a starting point to create your own personal search. Okay, now Glenn asked a question. We're going to get to 2 views of this in just a minute. I'll show the first one very quickly, and then we'll go into the search to start reviewing the criteria and how easy it is to set up your own search. But Glenn's question is, do you have earnings strategies? Absolutely. Don't recommend doing credit spreads around an earnings, of course. Too much potential for taking a full loss on one trade that would wipe out 10 previous trade. Covered calls, naked puts, capped gain with unlimited downside, not an earnings play. Buying calls and buying puts, well, if you're right, it goes in your direction, you could have a very high profit, Glenn. Of course, if you're wrong, you may lose 100% of what you invested into the long call or long put. So on power options, Glenn, you go into other strategies. Let me take out bear call credit for the time being, but we'll go back to that. And let's also take out, well, just leave that there. But if you go in and add the long straddle or the long strangle, that's what we, of course, advocate when going into earnings. So if I add long straddle or long strangle, I'd prefer strangle, actually. Yeah, I'm going to remove that. I prefer strangles myself, but I'll talk about that in a moment. But Glenn, if you go into the long strangle field, there's 2 things that you see. There's a learning center here, 2 articles Ernie wrote, using earnings surprises for strangle buying and a long strangle buying example. These focus on earnings. I'll link you to the blog there. So our approach for doing the straddles and strangles, really the strangles, going into an earnings event. And when you go into the search as well, or the sample searches, you have a default criteria that you can use here called earnings surprise in the straddle and strangles. Of course, one of the filters we're using is to look for positions between now and expiration, those that have earnings coming up between now and their expiration date. Some of them are further out in time. A lot of them, you see, we're at least looking 45 days out in time. You might ask why. I know a stock that has an earnings coming up next week. Shouldn't I buy a weekly strangle and pay less money? Well, what we found, again, historically, is that buying these strangles further out in time, even though it might have a higher net debit and a higher cost, the effective implied volatility crush doesn't affect the farther out options as much as the near term. We've actually seen strangle positions that are 2 weeks out in time and even maybe 5 days out in time when you've got earnings coming up 4 days out in time, where you pick a wide out strangle for a very low cost. You do have a very low monetary risk depending on your discipline into the position, how many contracts you buy, but you can actually see a 7 to 8% move on the stock and lose 100% on the trade because it didn't move enough to give you the profit, and the volatility crush affecting those near-term options was too strong. So whatever you paid into it was inflated, deflates afterwards, and unless you get close to a 9 or 10% move, you might not see a profit. With the farther out options that keep their time value and are less affected by the implied volatility crush because of an earnings event, you retain more of the time value after the event, so you actually see, and I'm not going to say always higher winners, right? You and I could pick weekly options, pick a weekly strangle, maybe pay 80 cents to get into it. The stock jumps up 8 points, we might be able to close it for a 7-point profit. So it looks like 2,000%. I agree with that. But over time, it appeared to us, historically testing, that going further out, the implied volatility crush did not affect these positions as much, and you see more winners even on the same securities that you would buy weeklies with, depending on the earnings, of course, and the movement. So to answer your question, that's what you'd look for, long straddle and long strangle. You'll see default searches for earnings surprise. That's where we'd recommend you go. All right, ladies and gentlemen, let's go back to our bull put credits for the time being, and let's talk about some basic rules, or some basic simplicity. Before you decide on any strategy, and we're talking about bull puts here, we mentioned bear calls, we looked at covered calls quickly, but before I pick any strategy, what of course we have to do is develop a trading plan. And I'm not saying that we need to go very in-depth and to look for specific types of positions, but when I'm selecting a strategy, the first thing I have to consider is the market sentiment. Where do I think the market is going over the next 2 months and the next 3 months? we're coming into an earnings season. I may feel there might be some volatility. There might be some unexpected moves one direction or the other. I may in general feel there's some weakness in the market due to global concerns, which we saw take effect the other day. I may feel or fear that that's going to continuously crop up over the next 30 to 60 days. Well, if that's the case, then naturally I'm going to look for more bearish positions. I'd look at maybe buying puts. I'd look at bear calls. I'd maybe look at calendar put spreads. I'd want to pick strategies that match my criteria and my market sentiment, I should say, first. Now, I know, and I'm an advocate of this because the PowerOptions tools let me do this, we of course can find bullish stock positions in a bearish market, and we can find bearish stocks in a bullish market. These tools will allow you to do that, to identify which positions are in a downtrend, shown weakness, maybe at the bottom of their Bollinger Band, even if the market is moving up and appears relatively strong. In addition to that, the next thing we want to set up after the market sentiment is, of course, picking a strategy that matches our sentiment and our risk. Someone might say, oh, I feel I'm bearish on the market. Which position might give me the best return? Well, someone might say, selling a naked call without owning the stock, instead of a covered call, but selling a naked call without owning the stock or an option to protect it will give you more premium than a bear call credit spread because you don't have to buy the extra option. And that's correct. But a naked call takes infinite risk to the upside. Is that worth it? If you're bearish on the market, buying a put is a good way to make money on the downside if you're right and the market and the stocks fall. However, you do know up front what your maximum risk is because your risk is only what you paid to get into the position. Okay, so once you've decided your market sentiment, which strategies give you the risk that matches your tolerance? Now we have to talk about time frame. Are you looking 30 days out to maybe get a better return on a credit spread or on a long call or long put, which I would advocate, so you have more time for the stock to move in your desired direction? If you're doing a calendar, if my sentiment is the market's going to be bearish over the next 60 to 90 days, well, I'd probably buy my put 60 to 90 days out and sell near-term puts against it for the bearish calendar put spread. Right? The time frame needs to match my market sentiment as well. And then, of course, we want to get into the option and stock criteria, which we're going to do right now. The reason why I bring this up is that I know a lot of investors feel that they're stuck into one strategy, that I can only trade covered calls. Okay, so we can look at the covered call position and we can say, okay, well, the market's pulling back, so I need to go a little bit more in the money to protect my stock holdings. I'm not going to get as high as a return, but I'm protecting it more because of the increase in premium. Well, maybe if you're bearish, instead of you should try to protect your stocks, don't get me wrong. You should use a collar or married put to do that, in my opinion. But you may want to look into bear calls. You may want to buy puts on the broad-based ETFs to help you profit on those positions as well as protect your current positions if you're stuck in stock. There's no one strategy I've seen that works consistently over time, other than the married puts, which Neil just asked. And that's kind of the thing. What I'm going to do now is that Neil asked about kindly show married put. Well, we're not actually going to go into that today. Okay, we're focusing on the search tool. And for those of you that are focusing on the radioactive trading techniques, I'm going to take a break real quick. I'm going to show you where that free webinars page is again. And I sent the link to everyone earlier. I'll do it one more time. Okay, so I'm going to send the link to everyone here. It's a public page, Neil. It's powerop.com/webinars.asp. In the options strategies section, there's a full webinar on using power options for radioactive trades. This discusses using the search tool, making adjustments based on your risk-reward tolerance, creating your own stock list, changing the criteria there, how to track and manage the position, and research and analyze it. If you want to see a full one on the married put, Neil, I'm going to point you to that one, the power options for radioactive trades under the options strategies. This presentation is more of a broad overview here of using the search tool itself rather than getting into one strategy, but we did have 56% of our audience say they were doing credit spreads, okay? And Bradley once more says, I apologize for running late. I'm assuming this is recorded. Where will it be located? And we showed that earlier. Once again, folks, when you log on, when you go to PowerOptions, powerop.com/webinars.asp, there's a variety of webinars here. Here's one from March 23rd on setting up the search tool. Most likely this webinar will replace that one. I'm going to clean it up a little bit though, maybe take some segments out of it as well. Okay? All right. Okay, so let's go ahead and go into bull put again, and we'll go into search. Now, early on, we showed you some quick ways to get started. You could use the sample searches in every strategy as a stepping stone, make some quick adjustments, but you have theme searches there that maybe match close to what you're looking for. We click on sample searches, select the one we want, and then we can make adjustments. Inside the basic search, you do also have other default criteria that you can use as a stepping stone to create your own personal search. And for right now, for covered calls, for naked puts, and soon for the credit spreads, you have those picks of the day to give you quick trading ideas that have been historically tested. But again, those are only available on the 20-minute delayed service and the real-time service and the premium also. Now, the main key, and we just reviewed the trading plan, although we see here in the search field that I've got 20 to 30 options criteria that I could use. I've got technical criteria that we can use, things that seem maybe more advanced. The number of days the stock's been above the 20-day or 50-day moving average, the days the MACD has crossed the signal line, things such as days short interest and all that. We look at fundamentals. Well, simple stuff, but we might say, well, how do I know what to do for earnings per share growth, price to earnings, price to book, price to sales, and all that. The key is you don't. Of course, we're always here to help you. Anytime you have any questions, you just schedule one of those coaching sessions, send us an email, or give us a call during market hours as well. But the key is, although you have this wide variety of criteria that you can use, the key is to keep it simple and just put in criteria that, again, match your trading plan and match your goals. Let me give you an example. We do this in a lot of webinars. We've reviewed this before. I have no idea what's going to come out. I'm going to do it on the fly. When you're getting started, you know what you're looking for. Simply hit clear filters in any strategy. That'll empty out the entire parameter field. Well, I've already decided my market sentiment perhaps. This is not a recommendation or suggestion, just for the flow of the webinar. So we're in bull put credit spread. The other thing I want to consider is what stock or option criteria would match this? Well, first let's focus on the stocks. I'm doing a bullish strategy. I need stocks that are stable or moving up in price. Yes, I'm going to go out of the money to get a higher probability of success in my bull put spread. But I also want to make sure that the stocks are quality. And I don't want any sudden surprises. So I'm probably going to want to do some things such as avoid earnings. So let's just take a basic, simple search. First, I'm not going to worry about stock price range. For a bull put credit spread, I would on a covered call, married put, collar, cash secured naked put. But here for the bull put credit spread or bear call, I'm not going to worry about that. When considering a bull put spread or a naked put, cash secured naked put, what is the outcome of your position? Well, one of the potential outcomes of any spread where you're selling a put, even a calendar put, is that if the stock falls below the put, you may be forced to buy shares of stock. So with that in mind, I should only look for criteria first, not focusing on the return, not looking for the highest return first, or what some investors say when you're doing spreads, you look for the options with the highest implied volatility. That's very dangerous. That's probably not something you want to do. You want to focus on the stock first, because if the stock doesn't move or doesn't fit the criteria for your market sentiment, you're going to have a harder time having a better success rate with your trades. So what am I going to put in? I'm going to put in specific criteria, almost as if I was putting in criteria to buy a stock. And what are some of the things I'd look for? And you see this in some of the defaults, which is why we have them in there. But under the fundamentals, the first thing I'd look for, of course, is stocks that have maybe shown good management, stocks that have grown in earnings from last year to this year. So I'm going to look for stocks of an earnings per share growth of at least 5%. When I'm doing long calls or long puts, Ernie and I tend to increase that. We look almost for stocks that have grown 10% or more in earnings from last year to this year to show really good growth and really good management and really good drive. PE ratio is probably not that important, but it's something I like to use. I like to keep it in a range of maybe 0 to 50 or 0 to 70, so the price to earnings ratio isn't too out of whack. Now, I don't know about you, but if I'm entering a bull put that has the potential that I could hit the maximum loss for an unexpected event, and that might be a 10-to-1 risk-reward ratio, I don't want small cap stocks that fluctuate too quickly. I'm going to look for larger cap or mid cap stocks. And anytime you have a question about what filter to use, just hover over the filter in the parameter field. You'll see a definition here. Mid cap, of course, is considered 2 billion or greater. Here it shows us this is measured in millions, so I want to look for a market cap greater than 2,000. Okay, so we'll put that in as well. So I'm only going to look for mid to large cap stocks, stocks that have shown good growth and have a relative PE ratio. And because we know what season we're coming into, and because I know my risk-reward ratio in a spread is going to be 5-to-1 or 10-to-1, I'm going to avoid stocks that have an earnings between now and expiration. Okay? All right. Jim, I do see your question. I'm going to get to it in just a minute. It's a little bit more advanced. It's not, I'm not going to say it's off topic here, but it's a little bit more advanced, so I'm going to show you that in just a second. Okay? I'll get to that in just a little bit. All right, so that's all I'm going to put in for the fundamentals. What about for the technicals? Well, you can use things such as the RSI or average broker recommendation, but I'm going to keep it simple. I'm going to just look for liquidity and an uptrend. So for liquidity, although I'm looking for mid to large cap stocks, I also want stocks that maybe trade on average close to 1 million shares per day or greater than 750,000 shares per day over the last 90 days. And we see this is measured in thousands, so I'm just going to put an average stock volume of greater than 750. In addition to that, we haven't set our time frame yet, but for right now I'm going to assume just August expiration. And we're going to look for stocks that are trading above their 50-day moving average, because August is about 40 days out. So I'm going to look for stocks that are trading above their 50-day moving average. And if I want to get more advanced, I may use the MACD. I can see some examples here, or I may use Bollinger Bands as well, depending on the technicals. But I want to keep things simple. What have I done so far? I've told the system that I'm doing a bullish spread. Haven't put in any option criteria yet, but I want to find stocks that have good liquidity, are trading in an uptrend, shown good growth in earnings, mid to large cap stocks, and I'm avoiding earnings between now and expiration. Essentially only 5 or 6 criteria as a starting point. Now, what else do we want to do? Well, now we got to set our options to match our trading plan. So we'll go into the options field, and the first thing, the expiration time frame. Well, we're going to start basic. Don't worry, we'll change this in a second. We're going to go to August, 44 days out. Don't have to put in a time frame because I'm just looking at standard August expiration. Net credit for my spread, well, since we're going 44 days out, we can go a little bit higher. We may go as high as 75 cents or 80 cents for the net credit. The return, well, this matches your goals. What is your trading plan return on investment for a leveraged spread trade? But you have to keep it realistic. I could, if they exist, the patented PowerOptions search here would find me credit spreads that offer, say, a 50% return and have a 90% probability. I could put those numbers in right now and we won't find anything. But if they exist, the system will find them. But I have to keep it reasonable. Okay? If there were spreads out there on a daily basis that offered a 100% return and a 90% probability, everyone would be trading them and everyone would be trading options. Let's face it, you guys are part of the elite. As far as other investors that just trade stocks and move in and out of stocks, you've made a choice to use options for better protection, regular income, management, and for leverage, controlled leverage, hopefully, disciplined leverage, so you're more advanced than most investors who just want to trade stock and try to follow rules of getting in and getting out. You're using more complex techniques, and you're in the right place, of course, to get the best education, the best tools. But for a normal leveraged spreads trade, think about this. If I look for a 50-cent minimum credit on a 5-point spread, that's an 11.1% return. So I'm going to use the leverage in the spreads and put in my 11% return. I want protection. I want to be out of the money, right? I want to have a good probability of my position expiring worthless. So let's try again. Since we're going 44 days out in time, let's go at least 5% out of the money. We can go more out of the money and get a better return for the longer time frame. And again, the theoretical probability that the stock would be at or above or below a strike price if we were looking at bear calls, we're going to start off with at least 75%. One other filter that I'll use in all of my searches, of course, with the exception of maybe the married put position, the radioactive trade that Neil asked about earlier, is liquidity on the option. And to start with, I'll probably just focus on the option volume today and the open interest. Now, if you don't have a specific idea in mind of what you'd like to use for open interest or option volume today, Ernie and my general rule of thumb is that you probably know how much money you're investing with. Obviously, you do. You probably have determined how much you're allocating, let's say, to each spread trade from your available capital. So if I've got, let's say, 15,000 of my portfolio I'm allocating to spread trades, I probably have decided maybe I'm allocating 2,500 or 5,000 to each spread. And that might dictate that I'm trading 5 to 10 contracts of a position, a 5-point spread, for example. So as a general rule, once you know your trade size, a general rule of thumb, your average trade size, shares or contracts that you're trading, I want to look for an option volume today that's maybe at least 5 times the number of contracts that I would trade. So I would assume that I would do 5 contracts, put an option volume today at least 25, and a basic rule of thumb is an open interest at least 10 times the number of contracts you're planning on trading. That's just a general rule of thumb. You could put in 5,000 open interest and 250 volume. That's perfectly fine if you want to look for higher liquid options, and that's actually recommended. But if you don't know, and as a starting point, the option volume today is the straight number of contracts that were traded today. I could also look at previous option volume and then the open interest as well. Okay, very quick review one more time. What have we done? We put in only 5 or 6 stock criteria that would match our bullish sentiment. We're almost looking for a stock we wouldn't mind buying. We set our time frame, a reasonable rate of return, reasonable probability, and we looked for some liquidity. Is this overly advanced? Did I put anything in for really technical indicators other than stocks in an uptrend? No, I didn't put anything for MACD or Bollinger Bands. We did also add that we want to avoid earnings, which I'd always recommend for those of you opening new covered calls, naked puts, maybe even calendar spreads, definitely the credit spreads and the iron condors, and the butterflies, which we'll get to Jim's question in just a little bit. Okay? All right. So we created a search from scratch. We put in some basic criteria there. Let's go ahead and run that search. Okay. Now, I expected that. Why did I expect that? The reason why, again, is I know I'm coming into earnings season. These are basic filters, but because we selected not between now and expiration, most securities are going to have earnings coming out between now and, of course, August expiration. I can change that and remove the checkbox. Go ahead and click Submit. Let's see what we get. Okay, so there's only 4 trades. Now, this might be too restrictive, but it's a very good list, although they do have earnings coming out, so I would have avoided them. Okay? Now, think about that for a moment. We put in just some basic criteria for liquidity and some basic criteria for showing a quality stock that we'd probably want to buy. We put in our basic option criteria, which is reasonable, 75% probability for a 44-day trade, which is 5% out of the money, net credit of 75 cents, return of at least 11, and just some option volume today. And we've narrowed the entire universe of bull put spreads down to only 4 results. This is the power of these tools. Even with just a basic set of criteria, with not going too advanced, you've saved yourself time by narrowing down close to the 1.2, 1.3 million credit spreads that are being built every 20 minutes on PowerOptions or in real time to just 4 that match a basic criteria. And for those of you that are curious, this stock technical and fundamental criteria that we just put in for the bull put credit spread, that is the exact starting point criteria that I'd put in if I was opening a covered call, which many of you know I don't trade that strategy anymore. So I'll just write covered call. Sorry, pen's not working well. Naked put. Okay, so any of the bullish strategies I'll stop writing because it's not coming out well. But for covered calls, naked puts, standard collar positions, married puts if I'm not using the default radioactive trade, which I do use, the default radioactive search, which is on PowerOptions as well. Also, this is the same criteria, of course, we'd use for a calendar call spread as a starting point. And it will narrow down your universe of options based on your other criteria. Now, that being said, we did take out the earnings date, which I wouldn't recommend. I would want to leave that in. I didn't see any results for bull put credit. Well, we'd want to do two things. Number one, when I see no results, maybe some things here are a little bit too restrictive. So let's narrow our net credit down to maybe 50 cents instead of 75. At the same time, let's take our percent range out of the money down to 3%, although I'm still looking for a probability of 75, so that might help us. The simple moving average is coming into play also because of the events in the last 2 weeks. But let's lower our net credit a bit, keep our return the same, lower our percent out of the money, and see if we can get more results. So if I run a search and get no results, I'm going to remove one or two criteria, and then we can lower it further. Now again, I personally would not enter any of these trades because we have earnings coming out between now and expiration. And even being more than 5%, 10% out of the money, for example, at Harley-Davidson, that's a risk I'm not willing to take. Why? Well, let's look at that Harley-Davidson position. We could sell the 42.5 put for $1.08 and buy the 35. It's a 7.5 point spread for 20 cents. I'm getting a net credit of 88 cents, and that is a 13.3% return. And I do have a 75% theoretical probability that the stock would stay above both strike prices. And I am almost 11% out of the money. But again, what am I risking to what I'm making? We're taking in 88 cents for a risk. Let's call it 90 cents. Maybe we'll get some midpoint price there. But I take in 90 cents. I have a 7.5 point spread, which means I'm looking to make 90 cents to risk 660. Okay, so this is about a 7-to-1 risk-reward ratio, almost an 8-to-1 risk-reward ratio. So if I take the one loss of 660, if I open 10 trades, I may have wiped out 6 or 7 previous successful trades. Okay, so that's a risk. With earnings coming up, this stock could fall 10%. Any bad surprise. Now, I'm not saying I like Harley-Davidson or anything like that. There's rumors of a buyout, Jerry said, on HOG. We've seen those before for HOG, for potential buyouts as well. You're absolutely right. I've seen those too. So the buyout could work extraordinarily well if it moves up. Okay, but if it fails and it drops back down to earth, or the earnings are poor coming up, then that's something I'd want to avoid. Okay, now, there we go. So those are some things that you'd want to consider. But let's talk about this. Okay, I'm not saying bull put is not a good strategy right now. I'm saying that based on this criteria, I don't know if I'd open any of these because of the earnings. Some of these stocks are going to have earnings in August. Some of them are going to have them at the end of July. So I know I could find bull put credit spreads on stocks that don't have earnings between now and expiration if I changed my time frame. So let's do that. Let's go to all months. All months really means all expiration, not just the standard months, any expiration, weekly, standard monthly expiration. And let's go for a time frame of, let's say, 10 to almost 30. Let's go 10 to 30 days out in time. Now, because I'm going to a shorter time frame, I'm going to keep my same criteria. It doesn't matter if I'm doing 2-day out trade, 7-day out trade. I still want to look for stocks that have the criteria I want, okay, for a bullish strategy. But now, let's go ahead, take our credit down. Let's half it. I'm going to lower my net credit. I still want to be about 2% out of the money. I'm still going to find 11% leverage returns, and I'm going to keep the probability. But now I'm going to go back into fundamentals. Let's add that earnings date back in. I'm only going to look for positions that do not have an earnings between now and expiration. Let's go ahead and submit that. Okay, so nothing's there. Let's do one more quick thing. Rather than looking for stocks that are above the 50-day moving average, since I shortened my time frame, I'm going to just look for stocks that are above their 20-day moving average. Let's see if we get any results. Oh, there's one. 16-day out trade for July 22nd. I can't believe July 22nd is only 16 days away. But here we see a spread that's got that 11.5% return with a 79% probability. And according to the date that we have, Facebook does not have earnings between now and July 22nd. Well, how would I verify that? I could add it into my columns again, or could go ahead and just use the more information button to go to research and stock research. This again, and here we see that the earnings are confirmed. They're coming out on July 27th. So the July 22nd expiration is safe as far as earnings go. Why didn't we see other positions? Well, the net credit might be too high. We could shorten it down to 15%. or 15 cents, but still look for that 11% yield. Let's see if we find any others. Just two different Facebook ones, okay? So just wanted to point out that that's part of the problems with the earnings. Make sure that you're using that because you might get caught in a trap. All right, so what are some of the subtle differences that we see between searches? Well, we already talked about what we see here for the credit spreads. You can search by return, the minimum net credit, the maximum risk. By the way, those of you that want to select strike differences, you could say that you just want to see positions spreads that are equal to the strike difference is equal to $1 or $2. Now I know the rest of my search criteria isn't going to match that, but let's do that real quick. This is another part. What we want to talk about is setting up a specific search for your requirements. So let's say that your goals for a bull put credit is to look no more than 10 days out in time. You just want 1-point spreads on stock that are trading in an uptrend. If you do decide that you have a specific criteria set, such as that's a very defined search. Less than 10 days out, only 1-point strike differences, make at least a 10% return and stocks in an uptrend. That's very simple to do. Okay, 4 clicks, 5 clicks. What will we do? Number 1, clear the filters. First, set our time frame. We'll go 0 to 10 days. Actually, let's go 0 to 15 for the 2 weeks out. Okay, minimum return, we'll say 10%. My strike difference equal to 1. And then we go into the fundamentals. I'm sorry, the technicals, my apologies. And we'll look for stocks that are trading above their 20-day moving average because we're looking at a shorter time frame. Didn't put anything for earnings, didn't put anything for minimum net credit, but let's go ahead and submit that. Okay, so now we have many results here, everything from 2 days out to 9 days out. We have too many results. That's good. You started off with the specific criteria you wanted, the 4 criteria you wanted, but now you want to narrow it down. What is the first thing I'd look at? Well, probability. Let's go back. Even though some of these trades are only 2 days out in time, let's put in that minimum probability of at least 75% or greater. Okay, so now we've narrowed it down to 113 spreads. GLD is in there, Disney's in there, Netflix, Yum. Now, let's see what we can do in regards to earnings. So I want to make sure that I don't have any surprises. So go back to fundamentals. We've narrowed it down to 107 results. See what we're doing here? We started off with your specific criteria, okay? It might not be yours. But if you have something in mind that you feel is maybe specifically to what you want, but is simple. I only wanted to look for large cap stocks. I only wanted to look for stocks that pay a dividend for my covered calls of at least 4%. Start off simple. Clear the filters. Put in the 3 or 4 criteria. Don't worry about everything else. Don't worry about the implied volatility. Don't worry about Black-Scholes ratios. They're available if you want to use them. But start off with what you want to see in a given strategy. When you get your results, if you have more than, let's say, 100 or 150, now you can start tweaking it to get better results. I can increase my probability. I can increase my net credit. I'm going to go, even though these are 2-day out trades, let's go to 25-cent minimum net credit with our 10% return and 75% probability. Okay, that was too much. We probably knew that, so let's take it back down to 15. There we go. GLD, Disney, Netflix, TLT, various ones that we know, positions that we know. Why aren't the others in there? Because of the earnings, okay? And that's why. But that's something that you want to use in all of these strategies. All right, so that's essentially what I want to do right now is I'm going to go to long call. We saw the fields here for what we could do for the options, right? The time frame, implied volatility ranges for the sell, the buy, or the ratio between, the important risk return, setting the price and strike price, minimum option bid. I don't worry about that on the spreads because I focus on the net credit. Black-Scholes ratios, bid-ask spreads, probability, and then liquidity. Let's go over to long call real quick, and let's go into the search. We'll just take the basic default search, and we'll see the exact same setup. The only thing that's subtly different now is that we have some other criteria for single option strategies. Covered calls, naked puts, buying calls. where we can set the IV over HV ratio, which investors use to see if the option is overvalued or undervalued, as well as the percent implied volatility range. And what's that? That's where is the option's implied volatility now compared to where it has been over the life of the option. Again, at any time, you can hover directly over the listing on the parameter field, and you get the definition and potentially some criteria that you'd want to use for that screen. What's missing? Well, we have our liquidity fields. We can look for option volume, percentage option volume, open interest, put-call ratio. Our strike price fields for the option ask, bid-ask spread that we saw before, probability as well, not important much in a long call. What's more important is probably the percent to double field. Why do I say that? Well, if I'm buying a call and I want a 90% probability, we know we'll have a higher delta. But if I buy a call for $8 and I find a position that has a 90% probability above, that doesn't mean 90% above the break even. That means 90% above the strike price. So it could be above the strike price and I could still lose money. It's only 50 cents above the strike price as I get towards expiration, and I paid $8 for the call. I'm looking at a $7.50 loss. Okay, so the percent to double field is a little bit more commonly used. But what's missing here in long call and long put, as well as in married puts and married calls, is the percent return field. Well, you don't have a return here. The return is unlimited, essentially. So you can't calculate the percent return, so that's what's missing here. But in every strategy, you'll just see subtle differences based on the specific strategy. But the same concepts we talked about apply. If I only want to look for long calls on stocks, for example, that are near the upper range of their Bollinger Band and have been, the MACD line has been above the signal line, and I just want to buy 2 months out, that's very simple. Okay, we'll clear the filters, look for at least, let's say, 45, so we're past August, to 75, so about the 60-day range, which would get her close. Actually, I'm going to go to 90 here. I'm sorry. I'm going to go to 90. The in or out of the money range I don't mind, but if you wanted to be slightly in the money with maybe a delta of greater than 0.55, but not too deep in the money, you could set that. Or I could just say that I want to be at least 1% in the money, but no more than 8% in the money, or by the number of strikes. Okay, I'm going to put the delta in. Let's go to the technicals. The percent BB20 shows us where is the stock now compared to the Bollinger Band, right? This is a question that someone asked about Bollinger Bands. So if I want stocks near the upper range, I'd look for stocks that are at 95%, meaning they're up at the top or near the top of their Bollinger Band. They've been moving upwards. And I want stocks that have been trading above, the signal line has been above the the MACD line has been above the signal line for at least, let's say, 2 days. Okay. Now, one other thing I always recommend in single option strategies is this might give me a lot of results on a lot of different securities. I want to make sure there's at least some contracts traded today and I have a strong open interest. Okay? I don't want to see options that aren't frequently traded. Even though I'm looking 75, 60, somewhere between 45 and 90 days at a time, I want to see some trades today. And I may even want to limit the bid-ask spread to, let's say, less than $1. All right, some basic things, but I don't want too wide of a bid-ask spread. I want to see some activity. I set the delta based on the range I'd want to be in the money, time frame, but the specifics of Bollinger Band and MACD as well. Okay, this will answer John's question. And now I have 76 results. Okay, so we've narrowed down the entire universe of close to, I believe, over almost close to 250,000 calls and 250,000 puts. We've narrowed that down to 76 results across the universe of options. It's a good place to start. Of course, we expect to see silver, mining, gold, the way things have been going there in the market. Those are the things that have been moving up, so that's what we'd expect to see. But there's others hidden in here as well, and you could continue to narrow this down even further. All right, we're 4 minutes past the hour, so what I want to do is open it up to questions. If anyone has a specific question on a search in a given strategy, let's go ahead and spend maybe 5-10 minutes fielding some questions here that come in. Just send me what you would like to see or any questions that you have about the search capability in any of the strategies. It doesn't have to be specific to a strategy. And let's see what we can do. Okay, another one came in from John. It says, what can I do? How would I set up a search for dividend-paying stocks? Covered call search dividend-paying stocks. No problem. What do we want to know? Well, let's go into covered call, and let's go into search. And as before, I'm going to ignore, well, nothing came up for picks today, but I'm going to ignore the results, and I'm going to hit clear filters as I scroll below the results. We want to set our time frame. So let's just go let's go about somewhere in the range of 30 days out in time again. So we'll go, what did I say, 15 to 45. That'll include August expiration. We go to fundamentals. What's the minimum requirement for a dividend-paying stock that you have? It's maybe, let's say, 3% or 4%. I'm going to go 3.5. Okay, so a percent dividend yield, just set that at 3.5. And maybe I want the ex-dividend date to come between now and expiration. The idea here is to try to get assigned on these positions. So I'm opening a covered call, slightly in the money on a dividend-paying stock, and either I'm going to get assigned early on the ex-dividend date, or I'll stay in the position, be in the money, and cross the ex-dividend date, maybe get the dividend. You might be assigned early, and that's, I think, what John's looking for. Okay, so we've put in our dividend. We want the dividend date between now and expiration. We've set our time frame, well, and then now we want to put in a minimum percent if assigned. Let's go at least 1.5%. The return if assigned for 15 to 45 days out. Still probably want a decent downside protection of at least 3% on a covered call. In the money, let's say greater than 1%. Liquidity again to see some action. I want to make sure that they're actively traded options. At least five contracts traded today in open interest, and let's say at least 25. Okay, let me go ahead and submit that search. All right, so we narrowed it down to 4 results. The Caterpillar here is the August standard expiration, 72.5. Percent if assigned is 2.6, 4.8% downside protection. The ex-dividend date is on July 18th. What is my one problem with this search? Well, a lot of stocks I know that I trade, that the ex-dividend date's coming out right after the earnings. So if I added the earnings date field, and here we'd probably see CAT may have earnings around somewhere between 7.15 and 7.20. So yeah, we gave ourselves a little bit of protection. Here, 4%. Here's one with an 8.6% on potash downside protection for the position. Stock's at 16. We could trade the 15 call for August for $1.38. And the ex-dividend date is on 7/8. But probably have earnings coming. That's actually in 2 days, I'm sorry. Of course, Verizon and AT&T look like their ex-dividend date is today, so we might have actually missed that for July 6th. But that's how you'd set up the search. Okay, someone asked, how can we screen for specific ETFs? Very simple. Earlier on in the presentation, you might have missed it, but in every strategy, you can go to the lists. And here's another key. We started off, remember, looking at the bull put credit spread sample searches, and we selected the sample search for ETFs, 5-star rated ETFs for Standard & Poor's. There were no stock and technical fundamental criteria set into that search because we were screening against the specific list. So in every strategy, you could choose to screen just against, let's say, Dow 30 Industrials, Investors Business Daily lists, NASDAQ 100, for example, Standard & Poor's lists, the S&P 5-star rated buys, 1-star sells, might want to use that list for bears, bear call spreads or long puts, value line lists also. You can create your own personal stock list, or you can choose to exclude lists. So we don't have any positions here because we looked for a dividend. We don't have any positions in this covered call screen that are ETFs. So let's go ahead and take out that percent dividend yield and the ex-dividend date. But let's leave our basic option criteria. Downside protection greater than 3, percent if assigned greater than 1.5, range in the money, and so forth. Let's go to lists. And I'm going to tell the system that I want to screen just against indexes and ETFs. Let's go ahead and run that search and see what we get. We didn't put any other things in there for stocks trading in an uptrend and so forth. But now we see that we have 144 potential covered call positions on an ETF by simply selecting that list. But I see a lot of things I don't like. For example, short-term ETF, it's an inverse ETF. I've got 3 times and 4 times, or 2 times and 3 times ETFs here as well. GDX is in there, that's good. But I've got all these 3 times bull and bears, which might be too risky for a covered call because these tend to fluctuate and have more volatility, especially with the mining market and the metals market the way it's been. So what I want to do now is go back into lists. I've told the systems just to show me indexes and ETFs. But now I may want to exclude inverse ETFs counter market or leveraged ETFs. But another thing I can do that I've done already in this field is ETFs to remove from standard searches, which is a combined list of the leveraged ETFs and the inverse ETFs. Now, how did I do that? Simply go into Create and Modify Lists. You can do this on any search screen, and any list that you create will be available in all searches. So I can choose to create a list, plug in my 10 or 15 symbols that I want, or 20 symbols that I want, save that list as my preferred stocks, and now across all searches I can just screen against my preferred stocks. Or I can go to Combine Lists. In the Combine List field, I can select any of the searches that I've saved or any of the default searches. And again, what I did is just simply check the box for inverse ETFs. Oh, I'm sorry, let me give this a name. I would call it ETFs to remove. All right, and I select inverse ETFs and leverage ETFs. We just click Create, and now my ETFs to remove are available in all strategies. I've already done that, so let me just go ahead and close that down, and we'll choose to exclude ETFs to remove from the standard searches. Let's run that, see what we get. GDX, SLV, those will probably be the ones. Here we go. GDX, SIL, the Global X Silver, VXX, short-term futures, XOP, oil and gas exploration, USO, the oil, so the standard ETFs. Question might come in is that, well, is there a covered call in SPY that matches that criteria? Or is there one on IWM? Let's find out. When you run a search and you have your results, you don't see the stock that you were hoping for, maybe on page 1 or page 2, just go into fundamentals. In the fundamentals, there is a search by symbol. So I'm going to say, show me everything that matched this criteria, but just on SPY if it exists. Okay, so SPY doesn't match these requirements. It's not due to the volume and open interest, I bet. It's probably due to the return. Let's take our return down to 1%. Take our downside protection down to 2%. Still looking for SPY 15 to 45 days out in time. Okay, there you go. See, so the ones that matched our other criteria, the percent if it's signed was just at 1.5%. Everything's below it because it's lower volatility. Why do I bring this up? A lot of times I get questions from a customer. Email in or a customer will call in and say, hey, I used your search tool and I put in stocks that were in an uptrend. I was looking for ETFs and covered calls that offered just a basic return and basic net credit. SPY, IWM, and QQQ didn't show up. I don't think your system's working. Oh, no, it is. All right, trust me, the system is working. It's just that this basic requirement, we're looking for greater than 1.5%. None of the SPYs match that with our other criteria, right, of having a minimum downside protection, at least 1% in the money. As simple as that screen was, they didn't match it because the return was below it. Again, we could see, does QQQ match anything we're screening for? As far as the indexes and ETFs go, absolutely. Okay, 1.7. One of them was already there on our first initial screen, but when we lowered it, we got more in. All right, so if you don't get the results you want, open up your parameters a little bit more. If you run your search and you have too many results, now you can start filtering deeper. You can increase the minimum return you looked for. You can increase the probability for spreads or maybe covered call assignment or naked put remaining out of the money or your calendar spread. And then, of course, you can also increase liquidity. If you wanted to look for options that are more active, you could screen for that as well once you set up your additional search. All right, folks. Well, I didn't see any other questions coming in. So please feel free to send in any last-minute questions if you do have them. I'll be more than happy to address those as well. Let's talk briefly here about what we just reviewed. Basic tips on the search tool. Remember, once you've selected your strategy, start off in the sample searches or go right into the search and use the default criteria as a stepping stone. A good rule of thumb is if you start off with a sample search that already has criteria selected or the default search, you want to change some of the criteria to match your needs, change one at a time. All right, so maybe increase the percent return when you open a sample search and then hit submit. Because if you did, let's say you saw the sample search and the active filters on one of the default searches, and you said, okay, well, I'm going to increase the return up to 5%, the probability up to 75, up to 80% from 70, and I also want to do a better uptrend. Now if you change those 3 criteria and you run the search and no results come up, you're not really positive which one of those criteria restricted your results the most. You have to go back and adjust all 3. So the best thing, starting off with those default criteria, which yes, Ernie and I do use as a stepping stone for our personal searches. That's why we created them. We're not giving direct recommendations or suggestions, but for things such as the picks of the day, and for things such as sample searches and the weekly screens and the other default searches, we did test them historically to make sure that they were logical and appropriate criteria to enter. We started off with what we originally thought we would look for, which was pretty close to what we ended up with in all of the defined searches. All right. Remember, I know that there's a lot of criteria there for options and stocks. Don't feel overwhelmed. Start by using the criteria you would look for. We showed that with that bull put search, how we just put in the criteria we'd want to match the strategy. We selected our time frame and our minimum criteria for net credit and return to match our goals, and we completely narrowed down the universe of options to only about 8 or 9 trades. Okay, so don't feel overwhelmed. Don't feel you have to use everything. If I put something into every criteria that was available in any strategy on the search, I would get no results. I know that. Okay, even something basic of greater than 0. And so don't feel pressure to use every criteria, but by all means, learn the criteria as you go. You can always hover over one of those parameter fields, see the definition. You can always schedule a coaching session or send us an email if you have a question about a criteria and what you might use, and we'll help you make sure that you understand that criteria, number 1, and number 2, how it might fit into the rest of the criteria you're already using. All right? When you're creating your own search, always remember to hit clear these settings first. If you have that specific search in mind that you wanted to use, looking for dividend stocks of at least 4% that are in an uptrend, looking for stocks that are only large cap stocks, pay a dividend, but are still in an uptrend. Clear the settings first, set your option time frame, set 1 or 2 of your basic option requirements, minimum net credit, minimum return, maybe probability, and then the liquidity. See some activity, but don't worry about anything else. Run your search. Now again, if it's over 150 results, you can increase your screening, maybe increase the probability, maybe increase the return to narrow it down. Okay, so clear it first, input just the settings that match to you. If you do run your search and you see nothing matches your criteria, ease up on some of those basic criteria you put in. And of course, if you still feel that you're still not getting any results that match what your needs are, schedule a coaching session or give me a call. We'll walk through it. We already talked about the easy way you can screen just for ETFs or a specific stock list, or remove a specific ETF list or company list, or remove the inverse as well. Okay? And if you want to open up things when screening for dividend stocks, I suggest using no lists. What do I mean by that? Those of you who trade radioactively, you know the default married put search that we advocate for the radioactive trades, it's on PowerOptions. You're looking at just the stocks in the IBD 50 and cancel them. If I pull up that default search and I add in, I only want to see stocks in addition to those criteria that pay a 3% or 4% dividend, I might only get 1 result, maybe 2. Okay, because a lot of the stocks in the IBD don't pay that high of a dividend. So if that's one of my requirements for a married put, to use a dividend paying stock, and I want it to be 3 or 4%, I'd have to go to no lists and then put in the other stock criteria, such as the earnings per share growth, price to earnings, to narrow down the list as well. Earlier we talked about the trading plan. Let's just review it. How do you set a trading plan? The basics first. Set your market sentiment. Select a strategy that matches your market sentiment. If I'm bearish and I feel that there's concern in the market going into the earnings, that there's going to be a lot of volatility, there's going to be a lot of sharp declines, I don't want to be in a long call. That doesn't match my sentiment, right? I might be looking for a long put. I might be looking for a strangle for the earnings event, approaching the earnings as strangles across the market, maybe even strangles on broad-based ETFs. That's what I might look for, okay? So make sure that the strategy matches your sentiment. Pick stock criteria that match the strategy. You know, we talked about the bullish criteria. What would I look for bear calls or long puts? Well, I'd look for stocks that maybe have negative earnings growth, stocks that are trading in a downtrend, where the MACD is below the signal line or is just crossed below the signal line. Those are bearish criteria we'd look for. By the way, there is a webinar that goes more in depth into bearish criteria and so forth. On that webinar's page again, underneath the option strategies, there is a webinar on criteria for long option trading. So it discusses the criteria we recommend for buying long calls and for buying long puts as well. All right, so back to the trading plan. Market sentiment, pick stock criteria that match that strategy now that you're in it. The time frame, weekly, monthly, or long term, it's very simple to set up in the patented search tool. You can do it with ease, but select your time frame, and that leads to realistic expectations. I can't expect to trade a 2-day out bull put credit spread that offers a 50% return on risk and has a 90% probability. Again, remember that you're part of the elite. You're learning options to have better hedging, have better management, and not be a one-trick pony of just buying stock or in and out or doing mutual funds and things of that nature, okay? So make sure your expectations are realistic. If you're shooting for the moon and you're more aggressive, hey, that's great. If you want to take those chances, what do I mean by that? We earlier looked for credit spreads that had a 75% probability, that had a 10-to-1 risk-reward ratio, but still offer at least 11% return, right? I could have created a search where bull puts had at least a 50% return, where I'm looking to make almost $2.25 against a 5-point spread, knowing that it would only have a 50% probability. I could take that chance. If that's your style of trading, the PowerOptions tools will still help you. It will still save you time to narrow down your research and analysis and find only those positions that match your aggressive criteria. Okay? Not the way that I trade spreads, but if that's the way that you trade it, the tool will help you. But again, be realistic. Can't find 90% probability with 100% returns. Okay? That's not why we're here. All right. So just to remind everyone, I wanted to point this out, our subscription services, right now we do offer an end-of-day data service. What does the end-of-day provide you? Well, it gives you access to the search tools, some of the analysis tools, most of the analysis tools, I should say. You can't have your results emailed to you, and you don't see the picks of the day. All right, but that's $40 per month for the end of day. The 20-minute delayed service gives you more timely updates. It's only $60 per month, not only for just the search tool, but for the portfolio tools to track and manage your positions, the tools we have for research and analysis, which again are for another presentation. Of course, $60 per month, that does include the picks of the day. So you get that for covered calls, naked puts, and you'll soon have them for credit spreads as well. And of course, the discount for year subscription is about a month free, so it's $660. The real-time service, every time you run a search, refresh the page, you're getting the numbers and calculations that very instant. Those of you that are trading weekly credit spreads and managing weekly credit spreads or shorter-term spreads, I highly recommend the real-time service, okay? And that's $120 per month. We do offer back testing, which goes back to April 2006 in the various strategies, and that's $40 more per month on top of the real-time cost, so it'd be $160 for real-time plus historical, or $100 per month for the 20-minute delayed plus historical as well. All right. Well, folks, I didn't see any other questions come in. I do hope that you got some useful information out of today's presentation. I encourage you that if you think of any questions later, send me an email to support@powerup.com. Remember, you can also call us during market hours at any time. If you live inside the U.S., I believe you can still reach us at 877-992-7971. And if you live outside the U.S., you can reach us at 302-992-7971. Of course, those of you that are trial members or subscribers, you can schedule one of those coaching sessions at any time as well. Well, ladies and gentlemen, that's going to do it for today. Thank you for joining me. Check us out next week, probably next Wednesday at 12 noon. We might go into that other discussion we were having. We have a webinar already there, but we might do a refreshed one on researching and analyzing these positions once you identify them. And then, of course, we may do some strategy discussions on Monday. Take a look out for that. We'll let you know when that webinar is. When we expand a little bit more on Neil's question from earlier, I believe it was Neil, I'm sorry, regarding strategies for earnings, looking at straddles and strangles for earnings approach. All right. Take care, everyone. Have a happy trading week. We will see you soon. Good night.